Hi there, welcome to Nepier Invest. We are already through the first 6 months of the year, and that means we are in confession season. And confession season is a time of year where company and their management are able to see how the company's business is performing, and they can update the market on that performance. And if companies already released some guidance, they'll be able to tell us if they're exceeding expectations, profit upgrade, or they're lagging behind expectations, a profit downgrade. Another thing they might be able to do at this point in time is if they haven't released any guidance, they might initiate their first guidance for the full financial year. So I am on the lookout for trading updates right now. And on December 23rd, two companies that I do follow quite closely did in fact release a trading update. But unfortunately, particularly for shareholders of these companies, it was a nasty early Christmas present. It's not the sort of thing you want to find under the Christmas tree, because the share price of these two companies fell between 10 and 15%. And those two companies are Booktopia and Bega, the great Australian food company. If you don't know either of these two companies, Booktopia is simply an online bookstore. And if I remember correctly, they also own Angus and Robertson. They're also into publishing, a recent IPO. But I've become interested in this company because the share price has been under significant pressure over the past month, and it has fallen significantly. And I'm just waiting for this negative sentiment to turn around, because I think it could be heading towards good value maybe, but I just don't know how far the share price will fall. And Bega, I like this company simply because of some of their products they do own. For instance, Dairy Farmers, Pura, Yoplait, Vegemite, Dare, and Zupa Duper, which I didn't know before I started preparing for this video. But just because I like some of the products that this company does sell doesn't mean the company itself is a good investment. So let's start this video looking at Bega and their trading update that saw the share price fall over 10%. Bega's trading update was simply titled Trading Update Financial Year 2022. And the market didn't like this trading update because the share price fell 58 cents or 10.32%. I've just included a summary here in regards to the trading update. You'll notice there are some positives and some negatives here. And sometimes the market will focus on the negatives and completely ignore the positives. What Bega have done here is put the negatives at the top, the positives at the top, and the negatives down below. The other thing to note here is some of the negatives are in regards to short-term issues. They are not structural problems in Bega itself. And this means that some investors might find value in Bega with the share price down 10.32% with these short-term issues that will be solved in the next year or 2 years. And usually that can provide some value if you do like a company at these particular prices. So the good news first, market demand in Australia and internationally remains strong, and Lion Dairy and Drinks integration and synergies on target. That's a recent acquisition. It seems like it's been integrated quite well at this point in time. Now to the negatives. Significant COVID-19 costs and supply chain disruption. That really sounds like a short-term issue, not structural problems. And even the competition for milk continues to be robust, which does put pressure on their biggest vertical, which is milk. So more competition means less margins in the milk division. And since milk division is their highest revenue division, that would put pressure on the margins of this company and the profits as well. They also gave us expectations in regards to normalized EBITDA for financial year 22, and expected to be in a range between 195 and 215 million, which is a significant increase on the previous year, which was 142 million. So why did the market react so negatively to this trading update from Bega? Initially, when I saw Bega share price down 10%, I thought maybe the market was focusing on those short-term negative issues and was completely ignoring the positives in regards to the trading update. But a little bit of research, I did discover some interesting things. And the interesting thing was that the main reason the share price did fall was because the guidance that Bega did give was lower than consensus estimates out there. And sometimes you will find that when a company doesn't give any guidance, you still can find some estimates that are provided by analysis. And that's exactly what happened in this case. For instance, I did find two articles, one from Reuters, and they mentioned that the EBITDA was lower than Refinitiv consensus estimate of 221.8 million. That's significantly lower by about 26 to $6 million. There was another article from the Motley Fool that mentioned that Bell Potter had an estimate for EBITDA for Bega, and that estimate was 223.1 million, also higher than the guidance that Bega Cheese gave. And that's the reason why the share price for Bega fell 10%, because their guidance was lower than the consensus estimates out there. Now let's have a look at the chart for Bega Cheese. This does go back almost 2 years to March or February 2020, and a well-defined uptrend from March of 2020 all the way to June of this year. In fact, the share price increased from about $3.80 to a high of $6.60. But that uptrend broke towards the start of July or the end of June. You can see the share price falling below the uptrend line I put in there. That's that sloping orange line. And the share price then went sideways, but there was a bit of support around about $5.05. And on the day, the December 23rd, that they released this trading update, the share price fell through that support level on fairly large volume. But there was a little bit of buying when the share price fell below $5. So the market was trying to get the share price back up above that support level. And if it did that, that would actually be quite bullish. And that would mean that support level would have held. Right now, I am doing this video just after trading has begun on the 24th of December, and the share price has popped up above that support level. So again, that's a little bit of a bullish sign that there is some buying out there, because people are seeing a bit of attractiveness in the value of this company with this 10% drop in the share price. Right now, there is quite a bit of negative sentiment in regards to Booktopia. The share price is in a well-defined downtrend, and this Christmas trading update they did release on December 23rd just added fuel to the fire, with the share price falling 14%. And it doesn't read really good, because their expected EBITDA and net profit after tax for the first half of this financial year is expected to be lower than last year. In fact, almost 50% lower, falling from $8 million in financial year 21 to a range between $4 and $4.5 million. And they have blamed some additional costs for this bad performance. And the three costs they have mentioned are additional labour costs incurred managing Sydney's COVID lockdown, so it seems like that might be a short-term issue. Ongoing setup costs of a second distribution facility, again, that might be just a short-term issue. And the recruitment of a number of new executives to the group's leadership team. Now, I don't know this company back to front, so I'm not sure why they had to recruit some new executives, and that could be something worth looking into. And these cost pressures have extended beyond the first quarter, so they didn't really expect it to be too material to the performance of a company, and have now impacted the business to a greater extent than was expected at the time of the group's AGM. And that's why the share price of this company has fallen an additional 14%. And you'll see when we look at the chart in the next slide, the sentiment behind this company right now is quite rotten. Booktopia IPO'd on the ASX about a year ago. And between about the time they listed and August, September this year, the share price was just going sideways. It did look like at one point during August into the start of September, the share price wanted to move into an uptrend, but there is a bit of resistance, or there was a bit of resistance at $3. You can see the share price hit $3. In the first few months, the company was listed and then pulled back. And then again, in the middle of August, or towards the end of August, share price hit $3 again and then pulled back. So that was a fairly strong resistance level. And from the time that the share price hit $3 towards the end of August, the share price has just kept on falling. In fact, the share price has started to accelerate downwards, falling from $3 back towards late August to a current share price of $1.38. So that's a share price drop of greater than 50, perhaps even 60%. And this trading update just added to that negative sentiment behind this company. So this does look like a falling knife situation, but I'll probably say, without even looking at it, it is quite oversold right now. So I wouldn't be surprised to see a bit of a bounce in the share price. I am doing this video at about midday on December 24, and the share price is down even more on this trading day. So that bounce hasn't happened yet. Just too much negative sentiment in regards to Booktopia right now. That's all I have for this trading update video on Booktopia and Bega. Sometimes when a company's share price does fall 10 to 15% on a negative trading update, I do find there is opportunity potentially there if some of the reasons behind the negative trading update are just short-term issues. And possibly that is true for Bega and even for Booktopia. So I've got to keep a close eye on both of these companies to see how they perform over the next few days, next few weeks. I'm a little bit more bullish on Bega right now than Booktopia simply because of the negative sentiment behind Booktopia. It is quite rotten right now, and I just don't know how far the share price can fall. If you do have any questions on these two companies or any other companies on the ASX, please leave your thoughts, your questions, your opinions in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.